Hey, what's going on, guys? This is Greg with Ideal Trading Ideas, and as you can see, we have British Petroleum up on the screen. This is the website. I always tell you guys to come here, get any information that you want from these websites before you start looking at actually purchasing the stock, right? Before you just go in and buy the stock, go to the website, get a little bit of information. Obviously, go to the Investor Relations tab, and you'll learn everything you need to learn. Anyway, we're going to move forward and go to our Robinhood portfolio, and as you can see, it's valued at $9,756.71, right? We're down $10.08 for the day, or negative 0.10%, and we're up $7.30 for after hours, or positive 0.07%, right? So today we're going to be bringing you our trade idea number 17, and it's going to be about British Petroleum, right? So we're going to type in BP, and it's going to pop up on the screen. And right now, currently valued at $26.77 a share, up 66 cents for the day, or positive 2.50%, down 30 cents for after hours, or a negative 1.11%, right? We're going to run through the chart really quick. 1 week chart says that we're down 71 cents, or negative 2.58%. 1 month chart says that we're down 47 cents, or negative 1.72%. 3 month chart says that we're up $2.20, or positive 8.95%. 1 year chart says that we're up $3.14, or positive 13.28%. And the 5 year chart says that we're up $5 or down $5.40, negative 16.78%. What we're going to do is click on and show you guys how to go ahead and do these British Petroleum covered calls, so that you can make money if you already own 100 shares or more, right? So we're going to click on trade BP options. And as you can see, it shows the price of BP 26.78 right there. It says BP buy call, right? So first thing you want to do is change that buy to a sell, right? So we have sell, and make sure you have call clicked on, and we have expiring today, July 2nd, right? So we're going to go ahead and change that, right? We're going to go just change it to July 9th, which would be next Friday, right? So what do we have right here? We have strike prices. Strike prices are the areas where you're saying you are willing to sell your BP shares at. So if you say, hey, I'm willing to sell my BP shares at $27 a share, that's what price that you're aiming for to sell it at. Over here, you says price. This is going to be the premium paid to you per share, right? So 44 cents is 44 cents times 100 shares, or $44. So if you're willing to sell your shares off at $27, they'll give you $44 up front. Remember, 44 cents times 100 shares is $44, right? So you can go up, and they pretty much giving you a premium all the way up to 3 cents, another 4 cents to 1 cent, right? Which would be 1 cent times 100 shares, $32 price, but it's going to be $1, right? So as we scroll down, we're going to just use the $27 strike price as an example. If you own the shares at, let's say, $26 to $27 would be what? A $1 difference, right? Which means that if you own 100 shares, that's going to be $100 profit, plus the $44 that they're willing to pay you for selling that $27, which means you're going to have $144 in your pocket altogether. So how do you do this trade? Well, first, you have to own the 100 shares of BP, right? So if you bought 100 shares of BP, let's say at $26 per share, you're going to spend $2,600. That's right up front. $2,600 has been spent up front. Once you have spent that money and you own those shares, $26 price, then you're going to come up to the $27 area. Remember, sell call expiring July 9th, or whatever date you want to pick. They're offering you $44 right now. You're going to click on that positive sign, and it's going to say short call, right? $27 call, negative 44 cents. Total credit is going to be 44 cents, right? As we scroll down, it shows you that expected profit and loss is going to be $44. BP price right now is $26.78, right? So we have different little price targets. Break even is going to be $27.44. So this little dot right here, this little white dot, is going to be your break even point, right? So basically, as time goes on and you go past the area where you would have max profit, BP starts declining in its profits, right? So as it goes up in value to $27.44, you're going to break even at that point. That's when that $44 is not going to be worth anything, but you've already pocketed in your hand, right? So it's not a big deal. You have a max loss that says unlimited. Now remember, max loss unlimited when it comes to these cover call trades, doesn't mean that you're losing money, right? You may think you're losing money because of what it's saying, but it's actually not saying that. What it's saying is anything over the $27.44 range, which is $27.45, is money that you left on the table, right? So that's why it's saying $40, $50, unlimited loss, right? So if it goes from $27 to $27.50 or $28 or even $35 or so on and so forth, that's money that you just left on the table. It's not going to hurt you because you said you were willing to sell at $27. So your 100 shares are going to be sold off at $27. You're going to make the difference between the $26 to $27 that you purchased at and where you sold at, which is going to be $100 difference, plus the $44 that they gave you up front, which is right there, which is going to be $144 total. Remember, they're going to give you $44 up front, and then once the shares sell at $27, you're going to get the other 100, right? So what you're going to do is just click on continue, and as you can see, it's going to say short call contracts 100 shares. So one contract equals 100 shares, right? So you already have the one put in, and they're saying 44 cents, and it expires good for a day. Minimum credit $44, and then you get to review the order, right? Once you click on review order, it's actually gonna go through with the trade. Right now, the market hours are not open. It's 8:22. They're gonna open. Pre-market is gonna open at 9, and the market's gonna open at 9:30. But anyway, it's gonna go through. You're gonna get paid your $44 up front, and that's that, right? Now, does it end right there? Answer to that question is no. What happens if it doesn't reach the $27 strike price by July 9th? If it doesn't reach the $27 strike price, you're going to keep the $44 that they paid you, and you're going to keep the 100 shares that you own, right? And then you can go on the next week and do the same thing. So that next following Monday, you can come on, you can do the same thing. You can pick July 16th strike, July 30th. What we'll do, we'll pick the July 30th strike. As you can see, if you decide to sell at $27 again, they're willing to give you 92 cents or $92 up front for saying that you'll sell at that price, right? So basically, if it does reach $27 by July 30th, then you would sell those shares off. Remember, $26 where you bought it at to $27, which means you still made $100, and then you picked up another 92 on top of that. So it'll be $192 that you picked up. Then remembering that you had already picked up $44 maybe 3 weeks back, right? So you would already be over the $200 mark in terms of making a profit, right?
Great Scott.
Which in terms of you owning the shares would have meant that you would have to sell the shares from $26 to $28 just to make the same profit that you made by collecting your premiums, right? So hopefully you guys learned something from dealing with me on this video, how to set up your cover call trades when you're owning these BP shares, right? So please like, comment, subscribe. I really do appreciate all the love and support. You guys have a great day. Enjoy yourselves. Bye.